As the countdown to the 4th of July holiday begins, we are seeing the market slowly start quieting down. So joining me as we head into the holiday weekend is Andrew Arons. Andrew, great to have you here today.
Thank you, Remy. Nice to be here.
Well, the Q2 is winding down, and of course, we have the holiday weekend ahead of us. And we did see some interesting trading on Thursday. U.S. stocks fell. We saw the 50-day average being broken for the S&P 500. But we do have to keep in mind that financials are higher following the Fed stress test results for the banks, and tech is selling off. So for the broader market heading into the next quarter, what do you expect to see?
Well, I expect to see the cyclical patterns in the market exist where we start to sell off around the end of May, and maybe we're going to go sideways or lower here, tend to pick up a third quarter towards the end of the year. Historically, what we've seen is we've seen the market actually have a drawdown of 14% over the last 30 years, and this year we're only down 2%. So I wouldn't be surprised if we go down a little bit here, 5 to 7% in the summer months, and then we'll swing back towards the third quarter. Just a typical cyclical pattern that we see here on Wall Street.
And Andrew, when we think about the bigger picture and fundamentals, there's no doubt that central banks will begin tightening as we head into the rest of this year. I know that you focus on some retail names as well as tech names, so can you tell me your forecasts for those names?
Well, there are a few stocks that look exciting, obviously, are Apple. Last year I was on national TV recommending Apple at 100, and now we're at about 142 today. I do think that Apple may move higher here towards the end of the year. I think maybe we could see 160, 165 on Apple. A couple of other names that I like also. I like Bristol Myers right here. Cheap stock, I think, in the pharmaceutical industry, trading around $55 a share. Basically, it's paying a dividend of 3%. And I think we may see that stock go back into the mid-70s. They've got some great oncology stocks in their portfolio. So I think they're going to do quite well. Also, the other stock that I like right now is Coach in the retail sector. Coach just took over Kate Spade, and they're looking to pick up on the millennial market. And I think that they're up about 30% this year. But in the past 5 years, they were in the mid-70s, so I think the stock could make a bounce back here.
And another thing I do want to talk about is volatility. If we look at cryptocurrencies in terms of their performance, they have been doing so much better than even the equity markets. But there is also risk involved when it comes to Bitcoin as well as Ethereum. So what is your forecast for cryptocurrencies as we head into the rest of this year?
Well, I think cryptocurrencies are going to be very, very volatile. I don't know how it's going to end up playing out. I would assume that they may go higher here in the long term, but in the short to near term, they could be really choppy.
And last but not least, before we wrap it up for the interview, I do want to ask about retirement tips. Now, you are the author of the book, Cracking the Code, and you offer advice to investors out there. So what are some tips for investors out there?
Well, I believe some tips for investors would be to make sure that they have their retirement income planning in place and then match their portfolio with their risk tolerance. Right now, we've been in a very good market, and people tend to get very aggressive when we're in a good market. So, we haven't had a downturn in a while. I don't think it's going to be imminent, but you have to protect yourself. We've been in an 8-year bull market, 250% returns here. The big picture is from 1987 to 2000, we saw the market go up 600%, almost 600%. So we could make quite a move here, but I do think that we're getting to maybe the 6th, 7th inning of this bull market.
Okay, Andrew, well, thank you so much for joining me ahead of the holiday outside of the New York Stock Exchange.
My pleasure, Remy.